What is up, my Forex for Beginners family? Okay, today we're going to be reviewing market structure, Fibonacci, and breakout structure, which you may have seen me write before, BOS. So anytime you see me write BOS, I'm talking about breakout structure. And today's lesson is the foundation of chart analysis. So this is probably the most important lesson and the most important 3 skills that you absolutely need to master. I actually don't want you to go any further in training until you master market structure, Fibonacci, and breakout structure. We have a private student group, and there you're supposed to post your charts from every lesson, and you're supposed to ask questions, and it's where me and the other members of the community can give you feedback on your chart and help you understand these key concepts. So, when you join the group, don't fear posting your charts, or don't be shy about it. Make your mistakes quickly. That's how we learn. There's nothing wrong with trying. Trying is actually an awesome personality trait. So you should be happy that that's part of your personality. It's a great skill. So try, make mistakes, learn quickly. That's the whole point of this group, is to accelerate your learning. Okay, so we're going to be first, I wrote it down because I don't want to forget anything here. So we're gonna just walk through drawing Fibonacci on a uptrend. So let's just first look at the charts here. So this is an uptrend. You can see an uptrend forming. It's going up and then it's going down. So if you haven't noticed this is what market structure is. See how the market moves up and down? Well, there is some way to really follow this and map this correctly, and that's what market structure, Fibonacci, and breakout structure is all about. So if you need to draw these arrows, go ahead. Sure, no problem. Do it. But I want you to also, let's label what's happening here. So you can just call this a high. So say we just hit a bit of support. Say this was support. Say this was some reason it stopped here, and then it was coming from a downtrend. Now it's making an uptrend. So we're just going to do this. Draw a high, and then this is going to be a higher low, and this will be a higher high. And then after you actually just kind of see how I've already labeled these two, I just want to remind you, you can just click on it, and on your keyboard, you should be able to go Control-C to copy and then Control-V to paste. So you can just quickly copy and paste, just to help you speed up your drawings. So it's making a high, then a higher low, then a higher high, higher low, then a higher high. And then this is another higher low. So when we talk about market structure, it's just identifying that the market is moving in this way. I want you to be aware that there is some form of pattern, and what Fibonacci does is actually measures the retracement. That's why it's called Fibonacci Retracement. Fibonacci is a mathematician. The charts are doing all the calculations and math for us. What we are doing is measuring the retracement based on Fibonacci's principle, and that's what the tools and the charts do for us. So we don't need to do any of the math. All we need to do is see the patterns on the chart. So here it's making a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. Okay, great. Next, it's placing Fibonacci. So Fibonacci retracement. So I'm just going to stretch it out here like this. And you can learn to do this too, but this is where I started. I'm just going to delete this green line. So I started here. I like to go, like I say, base to the tip of the candle. So I'm talking about the candles here. And some people like going wick to wick. You can do that. There's nothing wrong. Everyone does everything a little bit different. What I like to do is I like going from the base of the body of the candle. That's where I start my Fibonacci, and I go to the tip of the last candle. So see this one stride? That is what this is what I call as the impulse wave, and then there's a retracement. So some people don't know retracement. Retracement means to come back. So see how price started here and then moved up and then came back. This backward motion is what we call retracement. And I'm just kind of making a big point of this because some people they're missing that concept. So I want you to really understand. That's why it's called Fibonacci retracement, because this is all about measuring the retracement. Measuring the retracement. This is a retracement. Then there's an impulse wave. Then there's a retracement. Impulse wave. Retracement. Impulse wave. See what I'm talking about? So all we're doing is we're watching the what I call is impulse. I call the impulse is like the push wave. Well, I'm going to call it impulse, not push. Impulse wave and then retracement. Impulse, retracement. Impulse, retracement, impulse. Okay? So what we care about now is the retracement. This is a retracement. This is a retracement. This is a retracement. But let's do one at a time. I keep talking about A, B, C, D. So I'm just going to label this first A, and I want you to do this too. I want you to get in the habit of doing this. And then I'm just going to put a B here. Here I'm going to put a C. So C is always the retracement. And I'm going to show you in a drawing that I've made. So let me just finish labeling this. A, B, C, D. So when I talk about drawing Fibonacci and I say, make sure you know which is point A, point B, point C, point D. So when you draw Fibonacci, we start at point A, we drag it to point B, we measure the retracement C, and then we possibly buy in an uptrend here to point D. So we buy from here and we ride the wave to point D. And then these are our targets: 0%, negative 27%, or negative 61%. So those are our targets. So let me delete the Fibonacci tool again. Okay, so I want you to practice drawing. I want you to get a habit just of clicking here, here, boom, drawing your Fibonacci. I need you to just practice this, get comfortable using this tool. Okay, so we're just going to start here. We're going to start at the base. So that's point A. See that? Point A, I'm drawing it to point B. See right here? Point B is the top of this wick, but then I stretch it over to the right. So again, point A is where we started. Point B is where we dragged the retracement tool to. And then after that's a two click motion. So I'm going to do it again. From here to here, point B. So A, B, And like I said, this is Fibonacci retracement. So what we care about is the retracement, right? Retracement. And what is retracement? Retracement is point C. So again, A, B, so A is where we started, B is where we dragged the retracement tool to, and that was the impulse wave, impulse. So we drag it from A to B, then we let go, and it stays on our chart, and then we start looking at the retracement. This is what retracement is. Okay, and what do we notice? Okay, we notice that price came to right here. It came to 61.8%. Excellent, right? This is our ideal area. I've talked about this is our sweet spot, anywhere between 61.8 and 78.6. And look, we spiked up into it. It's a perfect area that we could possibly buy. And I'll show you later chapters how to actually enter and where to enter and how to enter. But right now we're just studying Fibonacci and market structure and break of structure. Okay, so now that you know that point C is a retracement, point D is where this is the next impulse wave. Where is this headed? And our target. So I've told you in the previous chapter that, so if we bought here, our targets can be 0%. So we could have closed our trade here, or negative 27%, or 61.8%. So those are our three take profits. And when I refer to the zero line, I say this is take profit 1, take profit 2, and take profit 3. So that's how we use Fibonacci to measure retracement, and then use it to set targets for take profit. And as you can see here, we retraced to C. D was the take profit, which was negative 27%. Okay, so now I want to show you this drawing just to, again, reinforce what we're going to be learning here. So like I took a little screenshot here and just drew in how, like again, point A is where we start. Point B is where we drag the tool to. So this was the impulse wave. Point C is the retracement. And point D is our take profit area. So I'm going to actually make this as a download. So I'm going to have you guys print this out. It's really good to keep by your, wherever you trade, or just on your, in your personal space, you should have this drawing. So I'm going to make it downloadable. So make sure you download it. And now we're going to look at this drawing here. And basically, this is showing you, I just freehand drew this. This is to show you how the market moves. So we're just going to talk about it. So like I said, the impulse wave, the retracement, impulse wave, retracement, impulse wave, retracement, impulse wave, retracement. Okay, so we understand A, B, C, D. This is our take profit. Now the question is, how do we measure the next point? So A, B, C, D. So we're here in time, and actually let's use this tool. This is called the replay tool. See these this rewind button here? Let's use an example here. Let's use it to use this tool. Basically, here we go. So when I click on it, it'll make this red line. And right now we're at point D. We're at point D. I'm going to get rid of this fib tool. So we still see A, B, C, D. But right now, we just took profit. So 1 second here, let me draw it in. So say this was a support area. We decided to buy here on the last retracement level. We placed a buy. Let me just, I guess I can write in the word buy. I'm just going to put down here. So this is where we joined the trend. and here we took profit, right? That's what it means to close your trade. So TP, take profit. We hit take profit. We're like, great, we made money, awesome. Just using Fibonacci, we made money. But now we're like, I want back in the trade. I want to make more money. So what do? We measure the next wave. So here, you see that at this point, see, I just hit play here. If you haven't used this tool, you can increase or decrease the speed, and then you can hit play to make the candles move. So, okay, so we just took profit here. We see that price is starting to come down, and we're starting to think about this next higher low, right? We're starting to think about it. Okay, how do I join this? Well, looking at our, how we use Fibonacci, A, B, C, D. Well, price is up here now. How do I apply fibs on the next wave? So this, again, this becomes, let me just move these to the side. This becomes our new point A. This becomes our new point B. This becomes point C. C is always a retracement. And D is our take profit. So remember I said in that last page I showed you, this is the impulse wave, retracement. Impulse wave, retracement. Well, now this is the second impulse wave. So we're going to measure this. So point A, point B. I'm going to stretch it over here. Actually, not maybe not that far, but right there. So point A, point B, and now we're wondering about the retracement. So we're set. We have our retracement tool set. Now we just wait and see what happens with price. We're just watching the retracement. See where it slows down. See where it finds support. It could continue going down, but it might not. Okay, so what did we see here? So this other feature here, right here, I'm looking at this toolbar again. If you hit this, this is actually the jump to button. So if you hit it, say the candles went too far, you can just click it on the chart and it'll move back. I'm gonna, throughout the future lessons, I'm gonna periodically tell you to use this tool here. It's called the replay tool because I love this feature and it really helps you learn. Okay, so we're at point C. It's the next higher low. We see that price came down. It's retracing, and it found it retraced to 78.6, and it's floating in between the sweet spot, like I referred to you before, right between here, between 61.8 and let me see here, 78.6. So that's our sweet spot. But I'm going to remove that for now. So it came to this level, found support, and then we have this bullish engulfing candle. Bullish engulfing means it's engulfing the candle to the left, and you see a lot of buying force, or buyers came in and printed this candle. Well, this could be your next, this could be your next buy area. So say you saw it engulf it, see how it engulfs this candle to the left? Well, as soon as it engulfs it, you could enter a buy here. In the future chapters, I'm going to show you how to actually enter this properly. But for now, I want you to know that at point C, the retracement is where we're looking to join the trend. This is the concept I'm trying to teach you. So we join the trend here. We buy. By using Fibonacci, we measured the retracement to an area. We placed a buy, and now we're looking at our targets. Either take profit, I call this take profit 1, take profit 2, take profit 3. And so say we bought, And now I'm gonna hit play. See what happens. And boom, beautiful. It hits take profit 3. So again, 0% is take profit 1, negative 27% is take profit 2, negative 61% is take profit 3. Awesome. Look at that. Using Fibonacci, we just took 2 trades and they each hit our take profit just based on Fibonacci, nothing else. Amazing, right? Okay. So again, I'm going to delete our fib tool. Let's do it again. Let's do it again. Okay. So now we're at this point. We're at point D. We're like, awesome, we just made more money and I want to do it again. Well, what are we going to start looking for? Another higher low so we can join the trend. Awesome, right? So let me put the buy over here. What else here? Okay, so now I'm going to move let me move this over here. A, B. So point C was the old retracement level, right? We measured, this was the impulse. We measured the retracement. We joined the trend. We took profit up here. And now this is the new impulse wave. This is a new impulse wave. So what do? We pull out our Fibonacci tool. What is this? Since this is the impulse wave and this is where it starts, this is where it goes, we're going to put point A here. Point B is here. We're going to pull out our Fibonacci tool. We're going to go from base to wick. Base to wick. We're going to stretch it out a little bit just so it's out of our way. I'm going to delete this. And let me delete this too. And now we're wondering about this higher low here, right? We're like, man, we just placed 2 trades and they hit our take profit. We're all happy. We want to do it again. Well, this is why I love market structure. You can keep doing it. You can keep doing it over and over again. As long as you can, really practice the skill and nail it down, you can make money anytime you want. Okay, so this is the new higher low, or this is the new, we're expecting a new higher low. We're now wondering about the retracement. So point A, I'm going to put this a little bit over here. This is point A, point B. Now we're wondering about this retracement that's happening. So let's hit play. Let me move point C here. So this is point C. We don't know where it's going to actually be, but we're just waiting for it right now. There's going to be a new higher low. That's what we're expecting because that's what it's been doing. It's been making a higher high, higher low, higher high, higher low, higher high, higher low. This is a uptrend market. Okay, so I'm going to hit play and see what happens. Okay, let's hit pause there. So in this example here, price came here and found support around this area. See how it's let me grab a arrow. See how it's hovering around this 38.2%. Well, obviously this level means something. So we got a bullish engulfing candle. That means this candle engulfed this candle to the left. And then it kind of came down and the same thing happened, engulfed this candle. And see how then it found this candle here. It just, see that spike tested this level. So this is acting as support. This level means something. And because of our fib tool, we are able to see that this is the new point C. Let's move that back, point C. It's also the new higher low. Well, we could have placed a buy here, right? I'm going to show you later how to actually buy into these markets. Say about here. So say we bought here. We use the Fibonacci tool again from point A to point B. We measured the retracement. This time the retracement came back to 38.2. We placed a buy here, and now we're looking for the uptrend to continue and to hit our take profits. And because this time we bought at 38.2, I always like trading from here. This is our sweet spot because it happens often, plus it gives us our maximum take profit, because if we buy here, we're going to make more money than buying here. But, you know, like I said, we don't try to predict the market. We just, you know, follow what's happening and we try to join the trend. That's our goal. So in this example here, it came to 38.2, found support, and we placed a buy, and now we're looking for our take profit area. So I'm going to hit play, and let's see what happens. Okay, take profit 2 was hit. I'm just going to pause it there. So here in this example, you may want to take profit here. Greed is a bad thing. Yes, in Forex, we want to make tons of money, and we can, and it's awesome that we can take a really small account and build it into something that provides us money for the rest of our lives. So I just want to encourage you guys to, you know, take profit when you can, because a wise man once told me, you won't go broke taking profit. So don't always hope that price is going to go to the moon. Take profit when you can, so you can continue building your account, and then over time, you know, when you're, you know, smaller percentage of money will actually be a larger monthly income for you because your account is now large. But right now we're just focusing on the basics. And so here we take profit 2 was hit. You know, you can see that it's forming a double top right here. 1, 2. I would exit the trade here. You hit take profit 2. You should be happy. We just had, what was it, three trades in a row? 1, 2, 3. So 3 trades in a row just based on Fibonacci. You won 3 trades. Amazing, right? Just by knowing how to identify the higher highs, higher lows, higher high, higher lows, higher highs, higher lows, and placing a buy trade at point C. That's the name of the game. That's how you use Fibonacci. So I covered right now drawing Fibonacci in an uptrend. And the next is in a downtrend. But before I get to the downtrend, we need to, again, talk about break of structure. So yes, we now know how to map a uptrend and how to buy on the retracement and how to take profit at point D. Let me move point D up here at our take profit, either 1, 2, or 3. But now we have to start looking for break of structure. And what does break of structure mean? Break of structure is when the direction changes, right? So we're in an uptrend right now. We need to be always aware of, is the market changing directions? And how we know that is by examining a possible break of structure. And like I showed you in the previous, let me bring it up again. Here, so we've done this part. We mapped this part. Now we want to be aware of this sort of break of structure situation starts happening. So let's just go through this example. Okay, so let's just hit play. See what happens. Oh, very interesting. This was a coincidence, but I love that it happened. So see how in this drawing I made, see how it's getting kind of stuck in this area? Well, look what's happening here. 1, 2, 3. Let's remove our fib tool. This is the new impulse wave. So let's do this again this last time, because it looks like something different is about to happen. I don't know, it may not, but let's just do what we learned to do. Okay, so let's start examining this wave right here. This is the last impulse wave here that we need to measure. So it goes from a higher low to a higher high. It forms a higher low, and then it starts forming some sort of resistance to this level here, and you notice that, right? Something has changed. So it's no longer making this pattern of higher high, higher low. Something has changed, and this is when you start noticing. This is where break of structure happens. This is also where consolidation happens. Consolidation means price just going up and down, kind of stuck. But always look for a change in direction. So here, let's just keep drawing in our labels here. So it makes we're going to label this as a high. And then we're expecting, it to do something like this. We thought it would be going like that, but it didn't happen. It came up here, got stuck. Well, this is where break of structure happens, right here. I'm going to draw it in for you right here. So see how it's making higher low, higher high, higher low, and we're expecting it to make a higher high, but it didn't do that. So I want you to just make notice of that. This is when break of structures happen. So, and how can we relate this to the Fibonacci as well? So say we're going to measure with Fibonacci here, this higher low point. This is a new impulse wave. We're expecting it to make a higher high, but let's use the replay tool here. So say we're here. So price is making a higher low, higher high, higher low. It doesn't make a higher high. It just makes a high. We were expecting a higher low. Well, this is our first example, or first clue to something's different here, right? Something's different. It came and made a high. And this is where usually break of structure happens. So it may not happen. It could just bounce around here and then continue traveling up. That could happen. But here's where Fibonacci comes into play with break of structure. So if we were measuring, say this was point A, this is point B. Let me play the next candle. So you see that it formed a proper higher. So instead of making a higher high, you have two double tops now, right? Something has changed. So we can pull out our Fibonacci tool, run Fibonacci from here to here. Let me stretch this out a bit. So Fibonacci, the definition of break of structure is when price retraces 100%, right? So from here, this was the new point A. Let's label it point A. We're expecting a higher high. It doesn't happen. It just makes a high that's equal to this level. And so this is where, let me get rid of this. So see, if price comes all the way back to 100%, see this? Point A is 100%. So it went from A to point B. Let me draw in point B here. We're now expecting point C somewhere. We're expecting point C maybe at 61.8, but price, if it continues all the way down and breaks this level, point A is 100% retrace. If it breaks 100% retrace, that's where we would write break of structure. So let's delete these lines here. Let's see what happens. Okay, well, here we could draw a break of structure. The direction has changed. Let me draw in BOS. Let me delete this tool just to clear it up. You can see that right point A, point B, and then point C. Point C has now surpassed point A. This is what break of structure is. When the impulse wave comes all the way back, retraces to 100%, the previous level it took off from, and breaks it, it made a lower low. Just make note of that. In my mind, this is a break of structure. It has now, instead of making another higher high, it didn't make a higher high, and it's actually made a lower low. So it went from a high to a lower low. Something has changed, and that's what a break of structure is. So let's just hit play. Okay, let's hit pause there. So see, we identified here that a break of structure happened, right? Something changed, right? It didn't make a higher high like we expected. It actually formed a high. It formed a double top. It made a higher low, made a high, and then came back, and it surpassed this point A. See, so this is 100% retrace and beyond. Once it goes beyond 100%, that's what we call break of structure right there. So what I do is I draw a line here, call it break of structure. All I'm noting is that structure is broken. I'm not placing a trade yet. I'm just making note that a break of structure has happened. And now it's making, and also I want you to make note of this, now it's making a lower low. This was pretty close to, it's a lower high than this, so I'm going to label this as a, you can even call it a, right now it's kind of a tie, but we'll call it a lower high, right? It could be a high or a lower high. So it made a lower high, and now it's making a lower low. Oops. And a lower high. And the lower low. So you can see that once you're able to identify break of structure is when you're measuring fibs, you continue doing what you're doing. You're measuring fibs from point A to point B. You're waiting for C, but it doesn't make a, it makes a lower low. It made a lower low here. That's when the break of structure happens. And now you start looking for a downtrend to start forming. We don't know how it's going to form, but know that because we see a break of structure, we should start possibly knowing in our mind, we know in our mind that possibly a downtrend has started. And look what happens. A downtrend starts to form. And that's what 100% retrace means and what break of structure means. So I want you to be able to easily identify break of structure. And I'm going to go through and give you more examples of break of structure, but we're actually still we just finished drawing fibs in an uptrend. So we continue drawing fibs in an uptrend until we identify a break of structure. And when we identify a break of structure, that's when something has changed. And what that something is possibly a trend direction change. So now we're possibly going to start looking for a downtrend, and then we start trying to see how we can join the downtrend. Okay, I just want to jump back to this drawing that I showed you before to recap. So carefully watch again. We were making a higher high, a higher low, a higher high, a higher low, and then we were expecting another higher high, but it didn't happen. We stayed at this level, and then we made a low, but it didn't surpass this last higher low. So this is also, you can see it's also called consolidation when markets start going sideways. But this is when break of structure happens, and I really want you to pay attention. Break of structure means a change in direction. And it's fairly, it's not too difficult to identify. It just, you need to be able to see it. So here again, we're making higher highs, higher low, higher high, higher low, and then we go up here and make a high. And then we go down here and we're kind of stuck here. And then again, we go up, and this is called, this could be looked at as a triple top. See how it went and tested this level 3 times and it still wasn't able to break it. And what happens is the next wave down, it surpasses this level that was essentially support. And now it's making a lower low. And oftentimes it goes back and retests this level. And it makes a lower high, then a lower low, lower high, lower low, lower high, lower low. So I want you to pay attention here. This is what break of structure is. You need to identify it on the right side. This is where break of structure happens in this example, because it was making an uptrend, higher high, higher low, and then it started to test a level and it couldn't break it. And then the minute it breaks one side, this side got broken. That's why I put this X here. And this is when a change in direction happens. So this could be an area where, you can join the trend. If you're able to identify the break of structure, you could, what I've done many times is when it breaks structure here, it oftentimes will come back to retest this level. This would be your sell entry. But I'm going to teach you more on that later. Right now, I need you to be able to identify essentially a break of structure is when the trend changes direction.